This is a Lake Hope project in Western Australia, and I call it the Magic Lake, not so much as for how it looks at certain times of the day and the year, but in the top 2 metres of that lake, in the clay there, is something in the order of about $15 billion worth of a niche mineral that not many people know about, but it's called high purity alumina. And process is going to be very simple: dig that material up and convert it. And we're going to convert it into this material. This is actually the Las Vegas Dome, if you're not familiar with it. And the Las Vegas Dome is covered in about 1.8 million light-emitting diodes. And virtually every light being put in around the world today, at the back of that is a small piece, wafer thin, as the other Monty Python fan said earlier on, thin piece of sapphire. And sapphire is a form of high-purity alumina. And so we believe that between our process and a recent acquisition of a processing technology, we're going to be able to transform the production of high purity alumina to become the lowest cost producer globally by a significant margin, and that will be our entry into this burgeoning business. And so LEDs I've mentioned, and artificial sapphire have been used in a wide variety of industries. Sapphire glass, it's on your watches, it's on your lenses, it's used extensively in defence applications and in medical optics. It's used in technical ceramics. It's a burgeoning use in semiconductors. It's one of the hardest substances known to mankind. It's used to polish some of the particles going into the semiconductors, and it's used for heat dissipation. And it's also used in electric vehicles, in lithium-ion batteries and other battery technologies to prevent heat build-up and allow the chemistry to work effectively. And so we're looking at a compound annual growth at the moment of about 20% per annum in the use of the market. And it is difficult material to make, and so we're seeing a sort of projected tightening of supply over the next couple of years, actually coming quite imminently. Now, I've been around long enough to know that I've never seen anything go into a supply deficit, as many of these supply and demand curves show you. None of them ever come true, but we're certainly going to see a bit of supply tightening and price increase. And the reason you want to get into the business, it is a very high profit and high margin business, and it's all about the purity. So we talk about high purity alumina, and the benchmark is 99.99% pure. For the chemists in there, that's only 100 parts per million of impurities, and that's the trick, is getting to that. And that's selling at about $15,000 to $30,000 a tonne at the moment. And you can get more margin on 5N and 6N ultra pure material, but the volumes there are not significant. And so that's the cream on the top. You really need to build your business in the 3N and the 4N space. That's where the volume is, and that's where we will start. So how much alumina do we actually have? It's an industrial mineral. There is no shortage of material that you can take to make alumina, but ours is very special because of the minerals that are in there, which allow us to have the low operating cost. We've got enough for at least a 40-year mine life on a benchmark production rate of about 10,000 tonnes per annum. And I mentioned that it was $15 billion worth of in-ground value. How much did it cost to drill it out? 150,000 Australian dollars. That's probably the best return on a drill program in the history of mining. And this is how we did it, with a rubber mallet and a plastic push tube. All you do is hammer it into the lake, and it comes out looking like this. It's a mineral, it's a sulfate mineral, that's the secret. It's called alunite. We have a patent on the process, and it's micron to nanometer sized particles. And so as a result, there's no on-site beneficiation required. Don't need to crush it, don't need to grind it. We won't need power on site, we won't need water on site. We're basically just going to dig up the material and truck it into Perth, as shown in here. So this is a West Lake. We have high-grade material in the pink. We're going to drive off the side of the lake 3 months of the year, stockpile it in the blue area to the north there, and then truck that material into Perth. We've already got environmental clearance on the surface of the lake, and we already have heritage clearance on the surface of the lake with the local group, which is the Naju community, based out of Norseman, long history of mining. Our discussions with them are more about the benefits to the community as opposed to whether or not we can mine there or not. Have a mining lease and application, and that'll progress over the next 12 months. And the idea is very simple. The project's about 550 kilometres east of Perth. We're going to dig up the material and truck it into Perth, which is where all the chemicals and the people that we need to process the material there. If we sell the material at $25,000 a tonne, it only costs us $170 per tonne of HPA to mine it and truck it to Perth. So there's the operating cost for the mining is about as close to negligible in the economics as you can get. We completed a pre-feasibility study this year. This is a $1 billion NPV project, benchmark rate 10,000 tonnes per annum. We've been pretty conservative on the product sale price, $22,000 a tonne, giving us a fantastic NPV at a very conservative discount rate of 10% of 1.2 million. Now, very importantly, that doesn't include a valuable byproduct credit towards the operating cost of the production of potash. The first stage of our process produces potash as a byproduct, and we have discovered other ways of making potash and new technologies that you're going to see us roll out a very significant potash story to add to the HPA over the next few months. And the other number in red down there at the bottom is the operating cost, $4,500 per tonne. And when you put that back into a cost curve analysis, and what we've done here, classic cost curve analysis, we're looking at current producers on the right-hand side, China and Japan, and we've got some new entrants, the main one being alpha HPA. Did anybody make money out of alpha HPA here? Oh my goodness. 10 years ago, a company like Impact, small junior explorer, came across a new way of making HPA using a solvent extraction process. Current market cap's come back a bit, hit $1 billion just recently as they scale up to their 10,000 tonnes per annum of production. Fantastic success story, and very soon we're going to be the only other company on the ASX to be able to do anything similar. There's our operating costs. We kind of jumped into the future where ourselves and Alpha are contributing to the market, and the dotted line at the top there is our average sale price used for the PFS. So you can see that the margins are there, and hence the significant NPV. But along the way, we've actually learned quite a lot about the difficulties of making high purity anything. If you've been in this game for any length of time, you've heard stories, high purity graphite, high purity silica, high purity manganese. They're actually very difficult to make. And not only after that, you've got other hoops to go through. So to go from an initial HPA project, you've got purity challenges. You need your own lab. This is a very simple thing that people don't think about. And one of the reasons that one of our competitors, I'll talk about, went into administration, took too long to get commercial return of assays from commercial laboratories. And you can imagine if you have a pilot plant, you've got to wait 6 to 8 weeks to get an assay before you make an adjustment to the plant. Never going to work. You have to be able to recycle your reagents. I won't talk about that today. But the other big thing is that clients really won't take you seriously until you have a pilot plant. You can carry on as much as you like about early client engagement. They'll take it on out of politeness, but if you have a pilot plant, things will speed up dramatically. And finally, you have to finance the scale up, and that's always a problem in industrial minerals. Taking the offtake enough to secure the debt that you might require to scale up on your capex. So how are we dealing with these challenges? So we have a federal government grant, 2.9 million, to work with Edith Cowan University, who are world experts in membrane technology. And I was having a very interesting discussion with one of the gentlemen in the room here about membranes. We all know about filtration and reverse osmosis, but there's actually a wide variety of other membranes that are being introduced into the mining industry by a number of universities, but Edith Cowan is one of the world leaders, and we're already seeing some tremendous improvements in our flow sheet and capex based on the introduction of membranes. And to get around some of the other problems, one of our competitors in the business, Chemex, went into administration earlier on this year because they had a convertible note. So financial mismanagement and just an absolute basket case at the board level. But once we looked under the hood, the technology that they have to produce high purity alumina, it's called the high pura process, was actually very significant. And so we ended up doing a joint bid with the original founders of the company who came back in, and we own 50% of a shed in Fremantle that's got some pipes and tanks in it that we paid $2 million for, which will transform the production of HPA. It came along with its own fully functional high purity laboratory. It's the only one of 3 labs in Western Australia that can do what this does, 66 elements down to the required detection limits. Needs to be externally validated, of course, but we now have the solution to on-site analysis. And it also came with a 90% finished pilot plant. This is how close that they got. So this thing has a nameplate capacity of about 25 tonnes per annum. But that was done basically on running Monday to Friday, 9 till 5. We believe that we can actually get this to the demonstration plant, 200 to 300 tonnes per annum out of this little shed in Fremantle. And it's a solvent extraction process. And the synergies are that the current feedstock that's being used is aluminium sulfate, and lo and behold, the minerals in the Lake Hope are aluminium sulfate. And we believe that we can potentially get the Lake Hope material into this process cheaper than they're currently buying their chemical feedstock. And once we lock those two together, we're going to change all of those economics that I showed you earlier, which is on a slightly different process, very significantly lower capex and even lower opex, we believe. But the biggest thing we've bought is actually time. We probably bought 2 years in terms of our entry into the marketplace, because despite the fact we've done the PFS, we're really only at test work level. We're now jumped 2 years into the future, and that pilot plant, we should be up and running completely, fully commissioned end of this year, first quarter next year. We'll be the only other company currently on the ASX able to produce any sort of commercial quantity of HPA. There is a new listing coming on, a Canadian company run by a gentleman called Richard Neville, very successful in Allchem, if you've invested in that. They're coming on with only a few hundred tonnes production, being able to scale to 2,000 tonnes production at a valuation of about 300 million. And so very significant premiums being put on HPA production because it is difficult. And lastly, in terms of the scale up, the high pure technology is modular. We believe that we can build plants of 1,000 tonnes, 2,000 tonnes for some tens of millions of dollars, whereas alpha HPA scaling to 10,000 tonnes and AEM scaling to 6,000 tonnes, we're looking at about, by the time that they've finished, $100 million per ton of HPA. Per 1,000 tonnes of HPA. So alpha is scaling up. It'll have cost them $600 million to build their plant from scratch, and they'd already spent $300 million in development. AEM spent probably close to $200 million already, and to scale up to 6,000 tonnes is another $300 million. We believe we can get to those figures for a literal fraction of that cost. And so this is the plan going forward, fairly straightforward. We're going to finish the pilot plant. We're down to the last technical issues in terms of precipitation of the material that will go to HPA. That should be done hopefully by Christmas or early in the new year. Get that up and running. So 2026 is really our year of engaging with customers and initiating the offtake agreements. And some of the investors with us already are established North American investors. And the idea is to build our first larger scale plant in North America and look for a listing on the NASDAQ underneath the critical minerals list. It is on the critical minerals list for the USA. So very exciting couple of years ahead of us. This is Alpha's story, just put that up there. It's taken them 10 years to get, by the time they get to 10,000 tonnes production. They're talking about building their own plant there in North America at 2027, 28. We started only 2 years ago. We'll be building our plant in North America at the same time. So it's taken them 10 years. We'll have got there in 4, we believe, by the time that we get into commercial production in North America. Get them while they're cheap. We're about market cap of 25 mil at the moment. We've got quite a lot of shares in issue. We do have a consolidation coming up, 1 for 10, after the AGM next week. And we'll have about 500 million shares on issue at that point. We are in the trough of the Lassonde curve, and to help get us out of that, keep your eyes open. We've already announced one announcement on Broken Hill. We're going to drill one of the world's best looking MT anomalies in Broken Hill in the first quarter of next year as well. So look, come on the journey. We're going to be one of the lowest cost producers globally. It's a unique deposit. We've got an industry disruptive metallurgical process. We're rapidly building out our capabilities in the final product specification. That's where the real nitty-gritty lies in terms of interacting with customers and producing the products that they want. And hopefully we get our timing right. I mentioned the tightening of supply and the increase in price next couple of years. So we hopefully deliver into a high margin growth market with significant upside potential at that time. And thank you very much for listening. Enjoy the rest of the day.